If you went in and bought gold then, you did quite well, not just for the duration of the bear market in stocks, which is only a couple of years, but then stocks laid in a wasteland for sometimes a decade before they could even get back to the price high of the price of gold. And all during that time, gold just going up and up. So we think that's one of the key factors right now in gold is to punch a hole in the bubble, watch the money flow. And our bet is, yes, you're going to see it in gold more so than we've even seen it now in terms of upside exaggeration, be far more accelerated, but mainly in the miners and silver. The miners are a place, such a small, little, tiny category that when big hands reach for it, when they realize that, hey, it's been doing quite well despite what we've been looking at in the stock market, the miners have been beating us. And yet nobody knows that. When they move that money in there, it's going to be like a wet bar of soap. I think you're starting to see the tonal change already in, for example, the day-to-day action of GDX. Sometimes you'll get a down day in gold or silver, and GDX will be up, or gold will be up 0.5%, GDX up 3%. It's a difference I've noticed over the last month. And I think that's partly a sign that there is money starting to move out of that broken bubble. And the numbers it takes for MSA to declare top in place for the stock market are literally a handful of percentage points below where NASDAQ 100 is right now. And I think in the next few weeks, you're going to see that trigger hit and the money flow will become exaggerated.
Okay. Wow. So let me just back up a little bit here, though. You don't think we're near a top then right now in the gold market? That's
No.
my first.
No. We're not even close, both in terms of price and probably time. And I'll also argue this point. Every time we get these massive moves in gold, we get a top. And we get a bear market. 1975, it went from the 30s to $200, collapsed back to 100. Then it went from 100 to 850 in 1980, and it collapsed back down to 260. And then it went from 260 to 1900 and 2000 to 2011, and it collapsed back down to 1050. So everybody thinks that once it's over, you're going down. Consider this possibility. Gold is money. It's been disacknowledged as money since Roosevelt and Nixon, removing it from domestic, removing it from foreign. And this next crisis we face, I'm going to bet that gold goes up somewhere and stays up there because it's locked in as real money again. And the currencies are pegged to it. And the question then is, well, what is silver and the miners going to do in what we consider to be this acceleration or catch-up phase? And that's why, personally, I'm most focused on the miners and silver. Yes, they've been dogs compared to gold, lagging behind the mama market. Sometimes leading, by the way. There's surges where silver, outpaces gold, and then it pulls back more than gold does. The game. But actually, they've been, since 2015, or going back just a year even. You go back to the February close of last year, and now the February close we're about to see, and measure how much silver's up versus how much gold is up on an actual percent basis. You'd be shocked. But anyway, the point being that those markets are going to go to levels that I think will surprise people. And certainly the miners are off the page underpriced to reality.
Yeah.
And that's where the greatest percent gain this year, I think, is going to be for investors. If you got to be in stocks, be in gold miners.
Yeah. So a few thoughts on that, and I want to work out silver a little bit more. You are the third person that's told me that in the last 3 days that I interview people all day long. The third person that I really, really respect just said what you did. You're in great company. That gold's not coming down is because it is going to be seen as real money.
Mm-hmm.
And that's what's happening right now that we're seeing.
It's what's beginning to happen.
Beginning. Yeah. Next question is does silver, it seems like it does have a little bit of a lid on it around this area.
Mhm.
Do you see us blasting that?
Mhm.
Even though it's had a great move, don't get me wrong.
Yeah.
Great. What do you talk to me about silver? What do you see silver acting, behaving, and do you see it breaking through,
Yeah.
the 233 level?
Every time silver goes up and makes a new price high, it'll surge a couple bucks and then go into a pause mode for like 3 or 4 or 5 months. Everybody declares that's it. It's a top, a major correction. The recent action since the isolated peak in October, which is 35, really, that was very temporary, has been congestive action. Yeah, we pull back hard, but most of it's been either side of 32, 33 area. Okay, right now we're 33 area, closer to that. If you close out the month, people don't realize this, at I think 32.85 or 32.88, just above where we are right now. That's actually a new high monthly close for the move. No, not a new high trade. But when we examine some intermediate trend metrics, not the big picture, but just like breaking it down into weekly action over the last 6 months or so, you get back up to that 35 zone again. This time it's not going to be just another, couple bucks and then a pause. I think this time when you get up to 35 plus again and take out that last high, it's not just another 2 steps forward, then a step back. I think we go into an accelerated phase at that point where you could see silver gush through 50, which is really an idiot technical level. It's not technically important except that it occurred, in 1980 and 2011, and occurred there very briefly, like, a couple days, and then it collapsed. That level is just an old signpost. It's really not meaningful. And I think you'll blast through that pretty quickly in the catch-up phase here, where silver suddenly does what gold's done, which is to say, take out, its prior highs. I think the gold miners, silver, for example, right now is a 1.14%, I think, 1.14% the price of gold. If you go back for the last 50 years and check out each year, what was the best reading silver had each year expressed as a percent of the price of gold? 20 of those 50 years, it was at least 2%.
Wow.
Okay. Now, if you just go to a routine, 22% again, big deal. You've been there before, 20 years out of 50. So it's really not excessive in any way. Well, even 2% of $3,000 is off the page. Okay.
Yeah.
Imagine gold goes up, a number I've thrown out before, which is nothing but a logarithmic scale number. If you look back in its past 50 years, there've been a couple 8-fold moves. From bear low to bull high, went up 8-fold. Okay. So, that's not abnormal. Well, 8-fold for gold right now would be $8,000 plus, because our bear low was 1,050. So, and there are factors out there, frankly, that could take gold up to a normal logarithmic scaled move. Well, what's 2% of $8,000? Okay, you get my point. Silver could go berserk just to get back to normal levels.
Right.
And there have been times it's been 3.5%. One time it was 6.5%. Forget that. You could get up to 2-3%. It's no big deal. And right now we're 1.14. Well, we're measuring daily action. Frankly, we're down to a microscope level, measuring that stupid spread. Going back to that October high when it was up at 1.28% or something. There's a structure such that if you uptick a couple good days and get a 1.14, you're going to surge that spread. And I'm betting that if you ever get silver back up over 35 again, and again, oh gosh, we're going to make a new high. Who cares? That kind of thing. That spread's going to break out. And I'm going to bet we're going to rush up to 2%. And again, you could do the math on that. Gold doesn't even have to go up much. Just getting 2% silver would be off the page. So
That's huge.
yeah. So, but the miners, if you go back And we ran a spread chart going back to the 1980s, where we measured the monthly close of the XAU index, which has been around since the 1980s.